Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets that move the markets, and today we're cracking open the Bank of New York Mellon Corporation's latest report. Get ready, because we're about to find out if this giant is just a sleepy old bank or a true financial powerhouse in disguise. And hey, if you like getting these insights delivered straight to you, consider subscribing and joining our Discord community, linked in the description below. Alright, let's dive into what BNY Mellon is telling us. This is a current report. Basically their way of saying, here's what's happening right now, and the date is July 15, 2025. They're announcing their earnings for the second quarter of 2025, which ended on June 30. Now, BNY Mellon is a huge player. They're talking about their common stock, pretty standard stuff. They list their stock symbol as BK on the New York Stock Exchange. They also have these things called preferred capital securities. Think of them like a fancier type of stock. This particular one is called Mellon Capital IV, and it has a pretty juicy interest rate, 6.244%. They can change. It's also backed by the full faith and credit of BNY Mellon, which is good to know if you're thinking change. It's also backed by the full faith and credit of BNY Mellon, which is good to know if you're thinking about investing in it. Its ticker is BK/P, also on the New York Stock Exchange. Then we have these depositary shares. Imagine owning a tiny piece of something bigger. Each one of these represents a super small fraction, like 1/4000th of a share of their Series K preferred stock. Again, this is on the New York Stock Exchange, and the symbol is BKPRK. The important takeaway here is that they aren't just dealing in simple common stock. They have various ways they raise money and issue shares, and this report is telling us they're active in all these different areas. The real meat of any of these reports is usually in the results of operations and financial condition. BNY Mellon released information about their financial performance for the second quarter of 2025. They provided an earnings release and a financial supplement as exhibits to this filing. The earnings release is like the official announcement of their financial speed. It details how they did between April and June. They're also giving us a financial supplement, which usually drills down into the numbers, giving us more detail on revenue, profits, and all that good stuff. It's important to note that parts of this release, especially anything deemed an excluded section, won't be considered officially filed for certain legal purposes, but the rest of it is, which means it's part of the public record and can be used against them if it's inaccurate. This financial supplement is where we really want to dig in. It gives us the nitty-gritty on their performance. Think of it as reading the company's own detailed financial report card. This will tell us about their income, where the money came from, and where it went. Typically, these supplements will break down their revenue streams like investment banking, asset management, and other services they provide. On top of the official releases, they're also holding a conference call and webcast to talk about these results and what they see coming up. They've attached their quarterly update presentation for this call. This is often where management tries to put a positive spin on things, but it also gives us clues about their strategy and outlook. We'll want to see if the numbers in the presentation match the official filings and if the story they're telling aligns with the raw data. And finally, the report is signed off by Jean Wen, who is the secretary. This confirms that the report has been officially submitted on behalf of the Bank of New York Mellon Corporation. Now, let's get to the part everyone really cares about, the financial details. While the filings themselves don't contain the detailed financial tables directly in this specific 8K, they refer us to Exhibits 99.1 and 99.2 for the earnings release and financial supplement. Imagine these as the treasure chest of information. Without those exhibits directly embedded here, it's tough to give you the exact numbers, but based on the context of an 8K filed on this date, we're talking about a critical snapshot of their performance. Typically, in a financial supplement like the one referenced, you'd see key figures like total revenue, net income, earnings per share, and important balance sheet items. For a company like BNY Mellon, which is a global investment company, you'd be looking at things like assets under management, their profitability from fees and commissions, and how their various business segments are performing. Are they growing their asset management division? Is their custody business strong? These are the questions these detailed financial statements would answer. For instance, a significant increase in assets under management would be a strong positive signal, indicating that more clients trust BNY Mellon with their money. Conversely, a drop could suggest investors are pulling back, perhaps due to market volatility or concerns about the company's own performance. You'd also want to see how their revenue is breaking down. Is it largely from stable fee-based income, which is generally preferred by investors, or is it more exposed to market fluctuations? Let's consider what a 10% drop in fee income might signify. It wouldn't just be a 10% hit to their top line. It could mean that a significant number of clients are moving their assets elsewhere, or that market performance has drastically reduced the value of assets they manage. This could impact their ability to invest in new technologies, retain talent, or return capital to shareholders. Similarly, if their net income margin, which is essentially how much profit they keep for every dollar of revenue, is shrinking, it tells a story. It might mean their costs are increasing faster than their revenue, perhaps due to higher operating expenses, investments in compliance, or increased competition, forcing them to lower prices. A shrinking profit margin, even with growing revenue, can be a warning sign about long-term profitability and efficiency. Investments in compliance or increased competition forcing them to lower prices. A shrinking profit margin, even with growing revenue, can be a warning sign about long-term profitability and efficiency. When looking at a financial supplement, you'd also examine their capital ratios. For a bank like BNY Mellon, these are crucial. They indicate the bank's ability to absorb losses and remain solvent. If these ratios are just meeting regulatory minimums, it might suggest a more conservative approach. But if they are significantly above, it could mean they have strong financial health and flexibility to weather economic downturns or pursue growth opportunities. Thinking like Warren Buffett, we'd be asking if BNY Mellon has a durable competitive advantage, often called an economic moat. Is their size and reputation allowing them to charge premium prices or attract more clients than their competitors? Are they so deeply integrated into the financial system that it's difficult for others to displace them? Their ability to generate consistent, high-quality earnings over the long term is the ultimate test. Looking at the structure of this filing, it's clear they're highlighting their earnings announcement and related materials. This is a standard procedure for immediate disclosure of significant financial news. The fact that they're specifically referencing these exhibits indicates that the crucial financial data is contained within them. Now, let's put on our analytical hats. The fact that BNY Mellon is providing these detailed financial supplements and holding a conference call suggests transparency and a desire to communicate their performance effectively to the market. However, the real test lies in the details of those exhibits. Are they reporting robust growth in key areas like asset servicing and wealth management? Are their profit margins healthy and stable, or are they showing signs of pressure? A notable risk for a company like BNY Mellon could be increased regulatory scrutiny or changes in monetary policy. If interest rates rise significantly, it could impact the cost of their funding, and if they fall, it might reduce the profitability of some of their revenue streams. Also, the competitive landscape in financial services is always intense, with new fintech companies constantly emerging. BNY Mellon needs to demonstrate that it can innovate and adapt to stay ahead. An opportunity might lie in expanding their digital offerings or leveraging their vast client base to introduce new products and services. If they can successfully tap into areas like sustainable investing or digital assets, they could unlock significant growth potential. In conclusion, BNY Mellon is keeping the market informed about its second quarter performance. The key to understanding their true health lies within the detailed financial statements that accompany this report. We'll need to see if their revenue streams are diversified and growing, if their costs are under control, and if they maintain strong capital reserves. Without those specific numbers in front of us, it's like judging a book by its cover. But the process of filing these reports tells us they are operating under the watchful eyes of investors and regulators, aiming to present a picture of financial stability and strategic progress. Alright, that's our initial decode of this BNY Mellon filing. What's your take on what these announcements might mean for the bank's future? Drop your thoughts in the comments below. If this breakdown was helpful, please hit that like button and subscribe for more in-depth financial analysis. And don't forget to join our Discord community. The link is in the description below if you want to continue the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.